This is a new podcast from Alpha Business Media. Welcome to the Deep Dive. When you first think of Nepal, your mind likely goes straight to Mount Everest, right? Or maybe those, ancient spiritual traditions. But today, we're going far beyond the postcards. We want to uncover something much more intricate. Nepal as a dynamic economic organism. And it's currently at a fascinating, really critical crossroads. This isn't just a place of incredible natural beauty. It's a nation that has shown, frankly, amazing resilience. It keeps bouncing back from huge external shocks, things like recent natural disasters. But its future, economically speaking, is anything but certain. Today, we're plunging deep into Alpha Business Media's exclusive foresight analysis on Nepal 2035. Our mission, to help you cut through the noise, understand the hidden risks, the surprising opportunities too, and truly grasp what matters for this remarkable Himalayan nation. We'll explore 3 plausible scenarios for its economic development. We'll identify the key wildcards, those things that could just radically change its trajectory and pinpoint some really unobvious opportunities. Get ready for some insights that, they might just surprise you.
It's true that if you look at the surface, the standard international institutions, the World Bank, IMF, Asian Development Bank, they offer a relatively calm forecast. They predict moderate but stable growth for Nepal, somewhere in the range of, say, 4.2% to 5.4% for the fiscal years 2025-2027. And this growth, they suggest, will be fueled by pretty traditional pillars. Tourism continuing its recovery, increasing hydropower production, and of course that steady inflow of remittances.
Okay, so stable, moderate growth. Sounds okay.
Exactly. But this consensus view, while, cautiously optimistic, it overlooks a significant tension. The Nepalese government's own ambitious 16th National Development Plan, it sets a far higher target, 7.3% average annual growth. And aiming for middle income status by 2030, what's often missing from those standard models are the systemic problems that continually undermine these bold goals. Things like chronic political instability, the shockingly inefficient way capital budgets are executed, which really cripples infrastructure development, and an extreme and frankly escalating vulnerability to climate change.
So you're saying the standard forecasts, even from the big players like the World Bank, they're missing something crucial here. What exactly is it about this analysis that gives us a clearer, maybe more nuanced picture?
Precisely. This analysis, it goes beyond just simple projections. It delves deep into 4 fundamental pillars of Nepal's economy. Then it identifies 3 critical wildcards. These are external forces that could dramatically alter its development path. And from all of that, it models 3 genuinely plausible scenarios for the country's trajectory, looking right out to 2035. It's about understanding the subtle, often overlooked forces at play beneath that surface.
Okay, before we peer into those future scenarios then, it seems absolutely crucial we understand Nepal's current economic foundation. You mentioned those near-term forecasts show cautious optimism, but they often mask these deep structural imbalances. It's like looking at a calm lake surface, but not seeing the powerful, sometimes contradictory currents underneath, right?
Exactly. If we look at the core macroeconomic projections for 2025 to 2027, the general picture is pretty much as you described: real GDP growth between 4.2% and 5.4%, inflation hovering around 5.0% to 5.4%, government debt manageable around 50% of GDP. And critically, remittances are projected to remain very, very significant, around 22-23% of GDP.
When we talk about Nepal's economy, there's one figure that always catches my eye, and it's actually quite startling. Remittances.
Yeah.
Tell us why these money transfers are so profoundly impactful.
Remittances, yeah. The money sent home by Nepalese working abroad, they are indeed the absolute bedrock of the country's modern economy. They account for a whopping 23.8% of GDP. That's one of the highest percentages anywhere in the world. They act as an incredibly powerful shock absorber, you see, bolstering private consumption, helping foreign exchange reserves. And they've been the main driver behind Nepal's impressive poverty reduction efforts over the years. It's a vital lifeline.
So a lifeline, a huge positive. It sounds like it. But is there a downside? Is there a catch to relying so heavily on money from abroad? It almost sounds too good to be true.
That's where the famous Dutch disease comes in. It's a classic economic issue. The continuous influx of foreign currency paradoxically strengthens the Nepalese rupee. This makes Nepalese exports more expensive on global markets, while at the same time making imports cheaper domestically.
Okay.
The result: local production, especially in manufacturing, it just struggles to compete. It stagnates. And most of these remittances, they go straight to consumption buying goods, often imported goods, not into productive investments that could build the economy from within. So you end up with an economy heavily oriented towards imports and consumption rather than fostering internal growth and exports.
Wow. And does that have other effects?
It does. What's potentially even more concerning is that this consistent flow of money, it also relieves pressure on the government. Pressure to implement difficult but really necessary structural reforms. Things like improving the investment climate, tackling corruption, making bureaucracy more efficient. It creates a kind of stability trap. Social tensions might be smoothed over by money coming in from abroad, but the fundamental issues, they remain unaddressed. And that could really hinder long-term development.
So it sounds like remittances, while absolutely vital, are a bit of a double-edged sword then. Is there any way to turn that around? To maybe channel that flow into something more productive? I think you mentioned the World Bank has some ideas.
There is, and it's a critical, often unseen opportunity. The World Bank, for instance, proposes redirecting these remittance flows. They suggest special programs specifically designed for returning migrants. The idea is to stimulate their entrepreneurial activity, transform that passive income they send home into active capital that can actually develop the country from within, building businesses, creating jobs.
That's fascinating. Okay, but remittances are just one vital artery. There's another enormous, often talked about potential in Nepal, sometimes called the white gold of the Himalayas, hydropower. Its potential is truly staggering, isn't it? Estimated at 83,000 megawatts, with maybe 45,000 considered economically viable. Huge numbers.
It absolutely is. Under its Energy Roadmap 2035, Nepal has set incredibly ambitious targets. They want to increase installed capacity to 28,500 megawatts and export up to 15,000 megawatts of electricity, primarily south, to India. Now, this would require gigantic investments. We're talking estimates around $46 billion.
$46 billion, wow. But the payoff could be huge.
The transformative benefits, if they pull it off, are undeniable. Successfully developing this potential would radically reduce Nepal's chronic trade deficit. You're exporting valuable electricity and simultaneously cutting down on expensive fossil fuel imports. Plus, it would provide cheap, clean energy for Nepal's own potential industrialization. It could really transform Nepal from a country that actually imports electricity during dry seasons into a stable net exporter.
This white gold potential sounds incredibly promising, almost like a silver bullet. But is there a risk? A risk of maybe putting all of Nepal's economic eggs in one basket here? Could this turn into a new kind of dependency, almost an energy needle, if you will?
That's a critical risk, yes. By relying so heavily on hydropower exports, Nepal risks falling into a new form of dependence, and primarily that dependence would be on India. With agreements already in place to export potentially 10,000 megawatts to India, Delhi gains powerful geopolitical leverage over Kathmandu.
Oh, okay.
If bilateral relations sour for some reason, or perhaps if India rapidly develops its own renewable energy sources faster than expected, Nepal could be left with massive, very expensive, and ultimately unused hydropower assets, stranded assets.
And there's another risk tied to nature itself, isn't there?
Yes, absolutely. To compound that geopolitical risk, this seemingly reliable source of income is actually becoming increasingly unpredictable. Why? Climate change. Melting glaciers, changing monsoon patterns, these directly affect river flows, the lifeblood of hydropower, so it makes long-term power generation unstable. It's a future source of energy that is itself deeply vulnerable to global environmental changes.
Speaking of global changes impacting Nepal, the third pillar we need to discuss is tourism. It was hit incredibly hard by the pandemic, we all know that, yet it seems to be showing a remarkably strong recovery. I read that April 2025 actually recorded Nepal's highest monthly influx of foreign tourists in its history. That's a powerful comeback. But how resilient is it really?
Well, while that recovery is promising, Nepal's traditional tourism model, largely based on mountaineering and trekking, it remains inherently vulnerable. It's heavily exposed to global economic cycles. Recessions hit travel budgets hard. Geopolitical tensions can scare people off. And obviously, health risks, as we saw so vividly during COVID-19, it's not really a stable, year-round industry in its current form.
Right. Which is perhaps why the government's recent initiative to introduce a digital nomad visa looks like more than just a tactical move. It feels like it could be a truly strategic shift, trying to attract a more stable form of long-term income. This proposed visa would allow remote workers to legally reside and work in Nepal for up to 5 years, provided they can prove a decent income, right? About $1,500 a month or $20,000 in savings, Why is this potentially such a game changer?
Because digital nomads are fundamentally different from typical tourists. They often live in a country for months, sometimes even years. They create stable year-round demand for things like rental housing, local services, restaurants, shops, you name it. They tend to be less sensitive to short-term shocks than holidaymakers, and they bring a higher, more stable income stream into the local economy. If this initiative succeeds, it could actually catalyze the development of high-quality urban infrastructure. Think high-speed internet, co-working spaces, modern cafes and services, things that benefit not just the foreigners, but local IT specialists too. It creates this powerful potential synergy, linking tourism growth with growth of the entire digital economy.
Interesting. Okay, so that's tourism and the digital nomad angle. Finally, let's consider the fourth pillar, agriculture. Now, this sector employs over 60% of Nepal's population, a huge number, yet it contributes only about 21% to GDP. That clearly points to extremely low productivity. It feels like a sector struggling in the shadow of these other, perhaps more dynamic industries.
The main and frankly overwhelming challenge for Nepalese agriculture today is climate change. Nepal consistently ranks among the most climate vulnerable countries in the entire world. Approximately 80%, 80% of its population is exposed to significant risks associated with floods, droughts, landslides. These events directly destroy crops, damage precious agricultural lands, and inevitably lead to food insecurity.
And the impact goes beyond just farming itself, doesn't it?
Oh, absolutely. The implications extend far beyond just food security. Climate-induced degradation of agriculture is a powerful driver of migration, both internal people moving to cities and external people seeking work abroad. Farmers losing their livelihoods are often forced into cities, or they become migrant laborers sending back those remittances we talked about earlier.
Ah, so it feeds back into a remittance cycle.
Exactly. It means climate change in agriculture directly fuels the economy's dependence on remittances, creating a kind of vicious circle. Therefore, investments in climate-resilient agriculture, things like modern tech, better irrigation, crop insurance schemes, they aren't just about improving farming yields. They become critical instruments for national security, for social stability, and for long-term macroeconomic stabilization. It's fundamental.
Okay, so we've laid out the economic foundations, remittances, hydropower, tourism, agriculture, and their vulnerabilities. But now, let's talk about the seismic shifts, the forces beyond the pure economic numbers that can completely rewrite Nepal's future. Our analysis identifies three major jokers in this deck, as you call them: domestic politics, geopolitics, and climate. Their interaction, probably more than anything else, will determine Nepal's future trajectory. Let's start with the first joker, political turbulence. You mentioned it earlier. Almost every international report, World Bank, IMF, ADB, consistently points to political instability and frequent changes of government as a key risk to Nepal's economy. But how does that translate into real-world economic consequence? What does it actually do?
Well, this abstract factor, political instability, it has very concrete, very destructive economic consequences. Firstly, it leads to chronic budget paralysis. The government might adopt ambitious plans, announce big projects, but the capital expenditures, the actual spending on vital infrastructure like roads, hospitals, power plants, they are consistently poorly implemented year after year. The issue often isn't a lack of money on paper or even a lack of plans. It's the state's inability to effectively use the funds allocated. And that's down to frequent changes in leadership, highly politicized appointments in the bureaucracy, and sadly, pervasive corruption.
So the money's there, but it doesn't get spent properly.
Precisely. And secondly, this political instability fundamentally undermines investor confidence, both domestic and foreign. A really stark example is the massive gap between the amount of foreign direct investment, or FDI, that's pledged to Nepal and the amount that actually flows into the country. It's estimated that only around 32–35% of promised FDI funds actually materialize.
Only a third.
Roughly, yes. Investors simply look at the situation and they don't see predictable, stable rules of the game, so they often choose not to take the risk.
So it's not just a statistic then, is it? It's literally unbuilt roads, unstaffed hospitals, power plants that don't get finished, real missed opportunities for Nepal's people because the promised money just evaporates due to uncertainty.
Exactly. The ability or inability of Nepal's political elite to reform its public administration to ensure some policy continuity despite government changes, that is truly the main indicator of the country's future success or failure. It's that critical.
That's a huge internal challenge. Now for the second joker, the geopolitical great game. Nepal's unique geographic location, sandwiched between two, frankly, rival Asian giants, India and China, makes its economy an undeniable geopolitical battleground. How does this play out economically?
Well, this competition plays out across almost all areas. China actively promotes its Belt and Road Initiative, the BRI. It invests in strategic infrastructure like airports, roads, some hydropower projects. However, their trade relationship is heavily imbalanced. Nepal imports vastly more from China than it exports, which creates potential debt risks down the line. India, on the other hand, is Nepal's traditional and still largest trading partner. It's the key market for those future electricity exports we discussed, and there are deep cultural and historical ties. Delhi is, naturally, closely watching Beijing's growing influence in what it considers its backyard, and it uses its own significant leverage, economic, political, geographic, to counter it.
So every big decision gets caught in this tug of war.
Essentially, yes. What this means for Nepal is that almost any major economic decision effectively becomes a geopolitical act. The choice of an investor for a large hydropower plant, for example, isn't just a commercial decision based on the best bid. It can invite approval, maybe funding from one side, and hidden or even overt opposition from the other. India might, for instance, signal it won't buy electricity from a plant primarily built with Chinese money or technology, potentially rendering the entire project unprofitable. This geopolitical competition significantly increases the risks, the complexities, and ultimately the costs of implementing large, vital infrastructure projects.
It sounds like an incredibly precarious tightrope to walk. In this light, that digital leap strategy you mentioned earlier, focusing on things like the IT sector, maybe carbon credit trading suddenly looks far more appealing, doesn't it? Because those global markets for IT services or carbon credits are presumably less susceptible to direct pressure from either Delhi or Beijing compared to, say, a huge dam project on the border. It seems to offer a path to greater autonomy.
That's a very important point, yes. Diversification into less geographically bound sectors definitely reduces that direct geopolitical vulnerability.
Okay, and then there's the third joker, the climate challenge. You've touched on it already, but it bears repeating. This isn't some distant threat for Nepal. It's an existential reality right now. The country consistently ranks among the top 10 most climate-vulnerable countries in the world. Give us some sense of the scale of that impact.
The figures are quite shocking, frankly. Annual direct economic losses from natural disasters, floods, landslides primarily are estimated at around $218 million. And a single major flood event, like one that occurred back in September 2024, that alone could cause over $340 million in damage. That's a huge hit for an economy of Nepal's size.
And it's not just the direct damage costs, is it? It ripples through everything else.
Exactly. It's crucial to understand that climate risk isn't just a standalone problem. It's a massive multiplier of nearly all other risks Nepal faces. It hits all four economic pillars we discussed. It devastates agricultural crops, makes hydroelectric power generation unpredictable, damages vital tourism infrastructure, and as we saw, exacerbates migration pressures. Furthermore, it intensifies the negative effects of the other wildcards. The constant need to spend scarce resources on disaster relief and recovery diverts already tight and often poorly managed budgets away from crucial long-term investments. That worsens the fiscal paralysis caused by political instability. A growing reliance on international humanitarian aid for disaster recovery can also become another lever for external geopolitical influence. Who pays the piper calls the tune sometimes. This really raises an important question. How can green technologies and, crucially, green finance become not just desirable, but a matter of absolute national survival for Nepal? Any long-term strategy for Nepal that doesn't have climate adaptation built into its very core is simply, well, it's doomed to fail.
That's a sobering thought indeed. So with these foundational pillars and these highly unpredictable wildcards in mind, our analysis projects three fundamentally different futures for Nepal out to 2035. Walk us through the first one, the sort of business as usual path.
Okay, our first scenario we call Himalayan tiger on paper. You could also think of it as the inertial scenario. This assumes that the political instability and the ineffective state apparatus we've discussed continue to dominate Nepal's reality. Under this path, the country kind of moves along an inertial trajectory. It maintains the appearance of progress, maybe ticking some boxes, but without achieving a true qualitative breakthrough. So in this scenario, the economy grows at a moderate rate, maybe 4 or 5% per year. This aligns roughly with the current World Bank and IMF forecast. However, those ambitious targets of the 16th National Plan, remember, 7.3% growth, middle income status, by 2030, they remain largely unmet. Pipe dreams, essentially. Major infrastructure projects, especially the big hydropower ones, they progress very slowly. They're plagued by those persistent bureaucratic delays, corruption, and a failure to attract the necessary long-term investment. That gap between promised and actual foreign direct investment, it stays high. The economy in this future largely rests on those remittances coming in from abroad and on international aid. Nepal remains firmly a lower middle income country by 2035, essentially stuck in that stability trap we talked about.
So kind of stuck in a rut, comfortable maybe for some, but not really moving forward decisively. A tiger on paper, indeed. What about the energy breakthrough, our second, much more optimistic scenario? What needs to happen for Nepal to achieve that kind of future?
Right, this energy breakthrough scenario becomes possible if, and it's a big if, Nepal manages to neutralize that disruptive wild card of political instability, at least concerning its strategic energy projects. This would require achieving a genuine, lasting cross-party consensus that developing hydropower is an absolute national priority above short-term politics. If they manage that, then stable and predictable policies could attract that necessary $46 billion in investment needed for the energy sector expansion. You'd see a construction boom begin, hydroelectric power plants, new transmission lines rapidly emerging across the country and towards India. By 2035, under this scenario, Nepal could become a major clean energy exporter, supplying maybe 10,000 to 15,000 megawatts, mostly to India, but potentially Bangladesh too. This would trigger a powerful positive multiplier effect across the whole economy. It would dramatically reduce the trade deficit, generate significant government revenues. The economy would likely enter a sustainable growth trajectory of 7–8% per year, confidently moving towards that middle income status.
Okay, that sounds much more dynamic. But if this is an energy breakthrough, focused so heavily on hydro, what's the downside? Does it introduce new vulnerabilities we need to consider?
Yes, there's a significant trade-off. The price, if you like, for this energy breakthrough is the emergence of that new energy dependence we discussed earlier. Dependence on one primary product, electricity, and primarily one major market, India. This would make Nepal's economy extremely vulnerable to any shifts in those bilateral relations with Delhi, and also critically to the long-term effects of climate change on those crucial river flows that power the dams. So it's a powerful potential solution, yes, but it's not without its own significant built-in risks.
That leads us neatly to the third scenario, which you've called digital leap from the shadows. That sounds much more diversified, less reliant on one single thing. What does that future look like for Nepal?
This is what we see as the potentially transformational path. It assumes Nepal's leadership recognizes the inherent risks of the raw materials-based model, the energy breakthrough, and also recognizes the, frankly, dead-end nature of the inertial path. And so they make a strategic bet on genuinely diversifying the economy, developing intangible assets. Now, this path doesn't mean abandoning hydropower, that potential is too large to ignore, but it complements it with two powerful new growth drivers. The first is Nepal's transformation into a genuine IT hub in the Himalayas. To achieve this, the government would need to implement radical reforms, removing restrictions on foreign investment in the IT sector, actively promoting and simplifying those digital nomad visas, and investing heavily, systematically, in digital infrastructure and, crucially, digital skills for its population. If this happens, Nepal could become a significant player in the global IT outsourcing market and an attractive, cost-effective destination for remote work. The aim would be to export billions of dollars worth of IT services annually.
Okay, IT hub. And the second new driver for this digital leap?
The second driver is what we call green monetization. This involves Nepal actively entering the global carbon credit market, leveraging its two key green assets, its vast forest resources and the inherently green status of its hydropower. The country would systematically work to certify and sell carbon credits to international companies and potentially governments that are trying to meet their own climate commitments. This includes actively participating in programs like REDD+, that stands for Reducing Emissions from Deforestation and Forest Degradation. Essentially, getting paid for keeping forests standing because they absorb carbon.
Right.
Considering that the global voluntary carbon market could reach $100 billion, maybe even more, by 2030, this could become a really significant new income source for Nepal, completely independent of its neighbors.
So what's the overall outcome in this digital leap scenario?
The outcome is a much more sustainable, diversified, and you could say smart economy. It's significantly less dependent on the whims of its immediate neighbors and less vulnerable to climate shocks affecting just one sector like hydro. Now, GDP growth in this scenario, we projected around 6–7% per year. That might not be quite as explosive on paper as the potential 7–8% in the pure energy breakthrough, but the argument is that this growth would be of higher quality. It would be more inclusive, create different kinds of jobs, and be fundamentally more sustainable and resilient in the long term. So just to quickly summarize the contrast again, using that foresight 2035 table from the analysis. Himalayan tiger on paper. driven mainly by money transfers and aid. 4 to 5% GDP growth. High dependence on remittances continues. Stuck. Energy breakthrough, driven overwhelmingly by hydropower exports. Potential for 7-8% growth, but creates new geopolitical risk and climate vulnerability for that sector. Digital leap. Diversifies into IT, the green economy, alongside hydropower. Offers solid 6-7% growth, but with a much more diversified export structure, significantly lower dependence on remittances, and greater resilience.
It's incredibly clear from this that Nepal's future is by no means predetermined. It really will depend entirely on the strategic choices the country makes in the coming years. And for investors, for businesses looking at Nepal, recognizing the indicators, the signs that point to Nepal moving along one trajectory or another that seems absolutely key to spotting and seizing these subtle opportunities, right? What are some of those new niches for investment that maybe go beyond the traditional sectors people think about?
Absolutely. Beyond the obvious ones like tourism infrastructure and hydropower construction itself, new high-potential niches are definitely emerging, especially if Nepal leans towards that third scenario. Firstly, that whole area of green monetization. This isn't just about selling kilowatt hours of electricity, it's about selling its green attribute through carbon credits. International companies are increasingly willing to pay significant amounts for verified carbon credits to meet their ESG goals and climate commitments. So, Nepalese hydropower projects can be certified, selling those credits on the global market. The same applies to the country's huge forest resources through those REDD Plus programs. This opens up markets for investment in specialized areas like certification consultancy, carbon accounting, reforestation projects specifically designed for carbon capture, and developing robust national systems for measuring, reporting, and verifying emissions reductions, MRV systems.
Interesting. Beyond green finance.
Secondly, the idea of an IT hub in the Himalayas. The potential here goes far beyond just basic call centers or low-end outsourcing. It's about creating a complete digital ecosystem. That requires investment in things like modern commercial real estate co-working spaces, co-living facilities suitable for digital nomads and local tech workers. It needs investment in private IT education and vocational training to bridge the existing skills gap. There's a need for local venture capital funds to support Nepalese tech startups. And crucially, underpinning all of that is the need for significant improvement in the quality and reach of internet infrastructure across the country.
Okay, IT ecosystem.
Yeah.
And the third area.
And thirdly, agrotechnologies and climate-resilient agriculture. Given the immense vulnerability of Nepal's agricultural sector to climate change, which we've highlighted, the demand for adaptation technologies is going to be huge and, frankly, guaranteed for the foreseeable future. This creates substantial opportunities for investment in things like modern, water-efficient drip irrigation systems, developing and distributing drought-resistant or flood-tolerant crop varieties, using technology like agro-drones for field monitoring and precision agriculture, developing digital platforms for farmers that offer localized weather forecasts, market price information, maybe agronomic advice, and also, critically, developing robust and accessible crop insurance systems to protect farmers against those inevitable climate-related losses.
So for the discerning investor, maybe a business leader looking at Nepal and trying to figure out which way the wind is blowing, what concrete indicators should you be looking for on the ground? If Nepal seems to be heading towards scenario 2, that big energy breakthrough, what are the key signals to watch?
Right. For scenario 2, the energy breakthrough, you'll want to see tangible progress on the big hydro deals. Look for the actual signing of large, legally binding agreements on foreign direct investment in specific hydropower projects, with clear timelines attached. You'll also need to monitor the physical pace of construction, especially of the cross-border power transmission lines needed to get the electricity to India. Are they actually being built on schedule? And crucially, observe the political stability specifically within the energy leadership. Are the key ministers, the heads of the electricity authority, staying in place for a decent period? Long tenures there would signal that the vital political consensus needed for this path is actually holding.
Okay, clear signals for the energy path. And if Nepal is charting a course towards scenario 3, that more diversified digital leap, what are the indicators to track there?
If Nepal is genuinely moving towards the digital leap, you should monitor first the number of those digital nomad visas being issued. And not just issued, but the actual influx of remote workers arriving and staying in the country. Are people taking it up? Second, watch the growth dynamics of IT services exports in Nepal's official trade statistics. Is that sector genuinely expanding? Third, pay close attention to the volume and the value of carbon credit sales transactions being concluded by Nepalese organizations, government agencies, private companies on international platforms. Is Nepal actually starting to monetize its green assets? And finally, look for concrete legislative action, particularly the adoption of new, liberal legislation specifically designed to foster the IT sector and the digital economy. A key thing to watch would be updates to the rather outdated Telecommunications Act to make it fit for the digital age.
This has been incredibly insightful. It really feels like Nepal's future, looking out towards 2035, is truly at a bifurcation point, a major crossroads. It can follow that inertial path, remaining kind of stuck in the stability trap despite some formal GDP growth on paper. It can make that big, potentially risky bet on a raw materials-based energy breakthrough, which might bring quick money, but also brings that high dependence and vulnerability. Or it could try to embrace this digital leap, aiming to build a more modern, more diversified, and ultimately more sustainable economy, really trying to root itself in these global megatrends of decarbonization and digitalization.
Absolutely. And if we just connect this to the bigger picture for a final thought, Nepal is going to be a truly unique case study in the coming decade. It's essentially a living laboratory. It's testing a fundamental question. Can a small, highly climate-vulnerable, landlocked country, strategically sandwiched between two geopolitical giants, can it genuinely harness these powerful global megatrends, digitalization, decarbonization, maybe shifting supply chains to completely rewrite its economic destiny? The answer to that question, as it unfolds in Nepal over the coming years, will shape not just the future of Nepal itself, but potentially offer lessons for the entire Himalayan region and maybe other vulnerable nations for generations to come.
A living laboratory. That's a powerful image. So thinking about everything we've discussed, what stands out to you, our listener, from this deep dive? Which path do you think Nepal is most likely to take, and why? It's certainly given us a lot to think about. We hope this deep dive has given you a clearer, more nuanced picture of the stakes, the challenges, and the surprising opportunities facing Nepal. Thank you for joining us on the deep dive.